Okay, so let's get started. We're going to go over Fibonacci extensions. Obviously, it's going to touch on what we went over last week as well, which was Fibonacci retracements. Because in order to do extensions, we need to do retracements as well. Although there are some people that just use extensions. I'll give you try to remember to give you an example of that later on. I don't do that, but there are some people that do. I like to throw out different things that different traders do, just in case you might take a look at that particular style of trading that indicator, and you might think, hey, that's I kind of like that, and you back test it and it looks like it works, and maybe something that's it's something that you can implement. Just because I use it a certain way doesn't mean you have to use it that exact way. There are different ways to use different indicators, of course. So basically, extensions, they're just areas, like we have our Fibonacci retracements, right? So retracements, they are areas that we can look for a possible bounce, right? Well, extensions are, let me turn this off here because I don't want to confuse anybody. Let me turn off, I have my extensions built in. So let me turn those off real quick. Okay, so, retracements are areas that we can possibly look for a bounce. So if you have a stock that starts here and it goes up here, it starts pulling back from there, and then it starts a bounce, it starts pulling back, and then we start looking for these areas for a bounce. Extensions are where we look, so basically retracements are where we can look for entries, right? And extensions are where we can look for possible exits. So let me draw some extensions here real quick. There's a couple different ways that you can draw these, and I'm going to show you all the differences and what I do and why I do it this way. We'll go over that. Okay, so all I did is when you're drawing those retracements, you're just drawing it from 2 points. You're drawing it from the low of the move to the high of the move, right? And then on extensions, you're drawing it from the low of the move to the high of the move, back down to the low of the move, okay? I'm going to show you guys, like I said, some different examples of how traders will draw those differently. And so then you have your extensions up here. So this is where you can expect to see, possibly, some exits. You might see some resistance at this 127 level, maybe at this 141 level, maybe at this 161.8 level. Keeping in mind that 61.8%, 0.618, 161.8, all of those are what they refer to as the golden ratio. That's the one that's most respected by traders, that 61.8%. So that, right here, you've got it here on your retracement, the 61.8%. That's the wrong one. Get on this. So you have it here on your retracement, and then you have it here on your extension. So people really tend to pay a lot of attention to those two. Like I said, they call it the golden ratio, and there's reasons for that. You can certainly Google and get some more information on that if you want to check that out. So I'm going to redo these real quick just to show you guys how we're drawing them, and I'll show you how to set them up as well. So let's do it on an actual move here. So let's make sure we're on our retracements, and let's take this move right here. Take it from the bottom down here. This happened after hours, of course. So we're going to take it from that bottom of that first move there. We're going to take it to where it started pulling back, right? This was where the significant move ended. Okay, so it really blew up here. This was a very significant move. It's not a move like from here to here, right? This is a significant move. And this is where your retracements and your extensions are going to work. And keep in mind, if you don't draw your retracement correctly, then your extensions are going to be off too, right? So retracements are much more important to draw those correctly. So there's where our extensions on that particular move. And as you can see, we pulled back right here at this 38.2 level and bounced from there, right? So that held true for that move there. So let's draw our extensions on here. Why is it not popping up for me? It's funny, sometimes my little pop-up works and sometimes it doesn't. So we take the bottom of that move to the top of that move and back down to the bottom where we started, right, for our extensions. So when you're doing drawing retracements, it's just 2 clicks from the bottom to the top. When you're drawing extensions, it's 3 clicks from the bottom to the top, back to the bottom where we started. And then that's going to give you those levels where you can look to be taking profits, look for a possible resistance, things like that. So retracements, entries, extensions, exits. Let me show you guys an example of what some people do, the way they draw their extensions. I don't do this, but I'm going to give you an example of what they do. And I'll tell you why I don't do it. So let's draw our retracement here again from the bottom of the move to the top of the move, right? Let's go to our extensions. Now, what these people do is instead of going from the bottom of the move to the top of the move, back down to the bottom of the move like I do, and a lot of other traders do, they will go from the bottom of the move to the top of the move to where it pulled back and then started the bounce from there. That area, so they'll put their first click here, their second click here, and instead of coming all the way back down here and putting their third click here, they actually put their third click where it bounces. I'll tell you why I don't like that, but let me show you what it does here. So we're on our extension, so we go from the bottom of the move to the top of the move to where we saw the bounce, right about that area, right? And let's see, where did it put? I need to put our extensions up there. Let me check something here. Make sure we're on the right one. Yeah, we're on extensions. So we're going to go from the bottom of the move to the top of the move to where the pullback started bouncing, right here. Maybe it didn't because they're way up here. Yeah, so you can see the difference. Let me show you the difference of that version versus the version that I did. So you can see that version, it didn't even hit the profit targets, right? Not even close. Whereas if you did my version, which is the bottom of the move to the top of the move, back down to the bottom of the move. And I'm going to explain why here in just a minute. We actually hit our profit targets there, right? We ended up hitting the 127. We pulled back there at that 141 area, bounced back up again, ended up breaking through the 141, and ended up overall actually hitting the golden ratio up there at 161. So let me explain why I don't do that. What we're measuring, let me get rid of these drawings here so you guys can see better. Okay, what we're measuring is we're measuring this move. Okay, this is what, in my opinion, fibs are all about. You know, these retracements and extensions. We're measuring that big significant move. We don't really care what happened afterwards. This is the move that we're measuring. Okay, and that's what we want all of our fib levels to be based off of. Is that first initial significant move. Why would we want to measure this move? We don't. You know, basically what we're looking for on that move is where we're going to pull back in relation to this move, right? So let me draw that again real quick so you guys can see what I'm talking about. So on those retracements, once again, from the bottom of the move to the top of the move, right? What is this telling us? So this is 100% of the move. Common sense, right? From here to here is 100% of the move, okay? So what this is telling us is when we get to this 38.2 level, we have basically retraced or pulled back 38.2% of that move, right? Same thing at the 50. That's half of the move right there. If we pulled back all the way to here, whoa, wrong one there. Sorry about that, guys. Oh, what's going on there? Hold on, let me fix this up here. Sorry about that. I had it squeezed in a bunch. Let me just switch this over and fix it. And I got all messed up, didn't it? And it's still messed up. Okay, so on this move here, let me get my thing back on. Make sure you got more working. Okay, so we want to measure this move here. That's what we're basing everything off of, not really caring what happened afterwards. So we talked about the percentage of the pullback. That's all these fib retracement levels are. And just look at retracement as pullback. That's all it means. Same thing. So you can really just think of it as being called Fibonacci pullbacks if you want to, if it makes it easier to visualize, basically. So, you know, we once we pull back here, we're 23.6% into that pullback move. We pull here, we're 38.2% of the original move, right? Same thing with a 50, 61.8, 78.6, and so on and so on. So this is why I do it that way, because we're basing everything off the fibs, off of this move, right? So these people that draw their extensions from here to here to here, in my opinion, that's the wrong way to draw an extension. Back test it for yourself, check it out for yourself. I've done it many times. I've checked it out. You know, back when I was learning about fibs, you know, I looked at all these different ways that people do it to see which one worked. And what I found is this one does not work near as often. I mean, you know, we looked at it just a minute ago where we saw that these levels for where we took profit off of doing it my way, which I think is the correct way, you know, were like here. And the other way, when you drew it, your third point being here, man, your profits were off the screen, and it never even got there. So, and I've seen many examples where it doesn't get there. So if I were you, I would be drawing them like that. I would draw your first point, you start here, to your second point here, and then just go back down to exactly where you started. Because that way you're measuring this move. You're not putting any emphasis on this pullback to 38.2, okay, when you're drawing your extensions. Okay, so basically, you know, what extensions show is based on the Fibonacci numbers, you know, which is part of the Fibonacci sequence, which we went over last week, where the price can reach after a pullback, okay, what it can go to. And it's based on, you know, whenever you're watching these stocks, they kind of go in these waves, right? You know, we kind of call them waves sometimes. It's based on the action of the waves. So based on the previous action of the waves and based on these fib numbers, it's saying that, hey, we can get to this level or this level or this level, okay? So it's kind of doing some future calculations for us. And you can calculate them yourself. But this is a really nice tool to use so you don't have to do all that math. But it's not that hard to calculate, right? Pretty much anyone can take the bottom of the move, if it was $2, and take the top of the move at, you know, $5, let's say. And you can calculate that, you know, where a 50% retracement of that's going to be and know where that price level is. But this is much easier to do it that way. It's just done in just 2 clicks and takes 2 seconds literally. And then, you know, so retracements basically show how deep the pullback can be expected to be, whether it be at this 23.6 level, 38.2, 50, and so on, right? So we're looking at how deep the pullback can be, and then from there, the fib extensions will tell us how far the move back up can go, okay? Entries and exits, very important. All right, so keep in mind as well, those areas, not just on retracements, but on the extensions as well, they're just areas to focus on. Doesn't mean that it's going to necessarily bounce at those particular areas. They're just areas to key in on, just like we would key in on VWAP. But do we take a trade every time a stock hits VWAP? Well, no. We want to look at other factors. You know, is there volume? What did it do last time it broke VWAP? You know, is there a lot more energy in the move this time it's breaking VWAP? Last time it broke VWAP, but it didn't hold. But if you look at the energy, and now we see a lot more energy in that move, well, hey, maybe we have a much better chance of breaking and holding VWAP now because there's more traders involved. There's more energy in that particular move. Same thing with these fibs. These are just areas to focus on. So when we start pulling back, you know, we make this move here, right? Back on. So we make this move, and we start pulling back. Now we're just looking. Okay, we're not taking a trade, we're just looking. So we break through this 23.6, we're still watching, right? We're still watching. it gets down to this 38.2 and it starts bouncing, okay? What do we want to start looking for here? Well, we want to look at our volume. We want to look and see, is there any other key support level there? You know, some support that you had drawn previously. Is VWAP there? Is there a, a moving average there? What other indicators are you showing that are around that level? Okay, and sometimes there's none and it bounces just fine. But if you have other indicators that can tell you, hey, yeah, this looks good, then that can strengthen the possibility of your trade going your way, right? So once we start bouncing there, then maybe you've identified, okay, well, this is where the bounce is going to happen. Maybe you didn't take this trade. You know, maybe you wanted to wait for confirmation, or maybe you want to wait for another bounce, or maybe you want to wait until it starts breaking back through maybe the next level. Then that's confirmed that, okay, yeah, that was the bounce. That's totally up to you. You know, you can have an aggressive trade versus a confirmation trade on fibs, just like we have on VWAP. You know, on VWAP, you can wait until we have a confirmation candle that you know, once one breaks VWAP, then you want to wait for the confirmation candle that stays above VWAP on the next candle next door, right? The same thing here. You can do the same exact thing. So, you know, you could have waited while this thing was tick-tocking back and forth here and waited for actual confirmation that it broke up through that 23.6 level with a nice volume, corresponding volume with it. That's totally up to you. Obviously, one's more aggressive than the other. People trade them both ways. 100% up to you. Okay, let me show you guys how to set this up real quick. It's very easy because yours probably look different than mine, which is fine. So this is on the extensions, and basically just went into the edit function. Yours may look differently on your platform than mine does. So you can see what I have checked here. I have the 0 checked, and I have it on red color. You can change the colors to whatever you want just by clicking that. So these are my extensions that I pay attention to. I pay attention to 1.27, 1.41, and of course 1.68. Other traders, you're going to see that they're going to pay attention to different levels. They're going to have a 100% level on there. They're going to have that one on there, which is the 100% level. They'll have a 138.2, a 161.8, a 200, okay? Just for me, from the back testing that I've done when I was learning how to do this, I focus more on those 3 levels right there. You can focus on whatever you like. As a matter of fact, let's do that. Let's just for example purposes, let's remove this and let's see what kind of difference we have here. Let me blow this out just a tad. Okay, so let's take this same move again. Let's just take a look. I'm curious as well. So let's draw our retracement from the low to the high of the move, right? Now let's go back and let's draw the extensions the way that I have mine set up, from the low to the high to the low. And you can draw this anywhere you want. You know, if you want to draw it way over here, you know, you can see the line going across the screen there. You can see where it is. You can draw it from the low down here. If I can get it right. To the high up here. Back down to the low. So you can draw them wherever you want to. As far as, you know, having them on your screen. You don't have to draw them at any specific point when you're drawing your extensions. You don't need to draw them within anything. If you want to have this way off so you don't have to look at it through your candles, you can do that as well. So it has your extension levels up here. Now let's change these extension levels and see where they will be. I'm going to draw another one. From here, from the start of the move to where it started pulling back down to where it started, right? And you see they match up there. But I'm going to change these. So let's edit these properties and let's put in the other ones that these other people use. And let's just see how they match up. So 1.38. Sorry. Yeah, 1.382. And then 1.618. And then 2, right? So let's say, okay, done. So that's just where it's going to look at. Obviously, the 100 is just going to be your 0 line here. And then you just got your profit targets are just basically different on this 138.2 level. 161.8 obviously stayed the same. So you got rid of this 127, and instead of 141, you got 138.2. So as you can see, that's why I like the ones that I use better. But you're welcome to use. They're both very popular. Both of those numbers. Use whichever ones that you find when you're back testing that work for you. Okay.
Hey Doc, quick question for you.
Sure.
Do you start the drawing where you entered or where the stock opened for the day?
Where the stock opened for the day?
Yeah, like why are you picking that particular point? Is that where it opened, or is that like the move where maybe you entered the stock? Like,
Okay, I see what you're asking. Okay, no. So the answer is no. So basically, so let's say that you're watching this stock, right? So make sure I'm on my deal here, and you see this move happening, okay, and you're already here, okay, and you say, oh man, this thing's already, it's extended. Let's say that your 9 EMA is kind of here, right? So you're already extended off of your 9 EMA, so you don't want to take that trade, right? We saw it late. Happens all the time, right? So whenever you see that move late, this is what we went over last week as well when we talked about retracements. Whenever you see the move late and you end up hopping in here, or let's say that you didn't hop in until, or you didn't see it until this level, right? So you're thinking, man, I'm getting in this thing late. I'm going to FOMO in. I'm going to probably buy at the top. So what are you doing at that point? You still want an opportunity to trade a hot stock, a stock that's moving, right? That's what we're looking for. So what do? That's when you start saying, okay, well, I'm not going to get in now. I'm going to wait for a pullback. We're always saying that. Well, hey, don't get in now, wait for a pullback, right? Hear that all the time. This is what we're doing with retracement. So what you're doing is you're taking your retracement. So you saw the stock here, so you're going to wait for a pullback. So you come up here, you get your retracements ready to go, okay? And then as soon as you start seeing that pullback happening, maybe right about here, you go ahead and draw your retracements. Boom, from the start of that move, has nothing to do with where it opened, where it closed, anything else. It's just from the start of a significant move. So, Jonah, we can call this a significant move, right? This is a very,
gotcha.
From here to here is a significant move, okay? Much more significant than, from here to here, or from here to here, right? Much more significant. So we saw this move late. So we're going to draw our retracements once we start seeing that pullback. So right here, because that's what we're looking to do. We didn't want to FOMO in, so we're waiting until the pullback happens. So boom, we draw our retracements. We go ahead and we wait for the pullback to finish. So now we're looking to hop in, okay, on this pullback. And this is areas that you focus in on for the pullback. Did it pull back? Sometimes it pulls back at the 23.6 and goes on. Sometimes it pulls back at 38.2 and goes, right? So these are just areas that we're looking at for that particular pullback. So hope that makes sense, and I hope that answered your question.
Yep, absolutely. Yeah, okay. Yeah. I was just looking to know where I should start those.
Absolutely, and we're going to go over some more examples of this as we continue on with this session as well. Okay. So we went over retrace. I showed you guys how to set up your extensions. Let me show you a quick little trick that I like, because it's kind of a pain in the butt whenever you draw your retracements to have to go back and draw your extensions. So let me show you what I do. So on my retracements, I add my extensions in. A lot of your numbers are going to look different down there. So I'm going to take, so you take minus 0.27, minus 0.41, and minus 0.618. Save as default, so it remembers it next time. Every time you draw it, it'll be the same way. I have all of my colors in there, and I click OK, and boom, it puts it up there for you. So let me show you. Let's remove this drawing. Let's make sure we're on retracements. We are. We're going to draw that move again from the bottom of this move to the top of this move. And I don't have to go back and draw my extensions. They're already there for me, right? So let's make sure that that's correct. So let's go here. Let's go to our extensions, right? And let's go from, I'm going to draw it on the side so you can see that they match up. So I'm going to draw from the bottom of the move to the top of the move, back to the bottom of the move, and they line up perfectly. I mean, I was off a tad because at the bottom I didn't get perfectly on there, but anyway, that's what your numbers are going to look different. Instead of 161.8, it's going to be negative, but who cares, right? You don't care about what the number looks like. You know that that's the 61.8 level, You know that that's a 41% level, and you know that that's a 27% level. 127, 141, 161.8. So they're the same. It just saves you another step, so you don't have to go back and draw your extensions separately. Whenever you draw your retracements, your extensions are totally ready to go for you. So let me show you all that one more time so you can get a screenshot of that. You just want to set those numbers up if those are the fib levels that you want to pay attention to. You know, just set it up that way. That way, whenever you draw your retracements, your extensions are done for you, and it saves you an extra step of having to draw your extensions on top of it once you enter the trade. Nice little trick there. Okay, so let's look at a couple of other things here. It's going to remove this drawing here. Let's look at some more moves. What else ran on Friday? BTBT did some running on Friday. Let's check that one out. Yeah, I had some I had some stuff drawn on this guy. So let's look. Let's take this move here. Let's take this move. Let's take this bigger move. All right, so let me get rid of these guys. Zoom out a tad here. All right, so let's take a look at this move here. Am I on retracements? I'm on retracements. Okay, so let's take at the bottom of this move here, from the swing low to the swing high, and let's see if it worked out. Keep in mind, these don't always work out, right? And a lot of times where you'll find that they don't work out is a lot of times where you're drawing it on a move that it's really not significant, or you're just drawing it in the wrong area. So they don't always work. Like I said, they're just areas to focus on, not areas to say, okay, I'm taking this trade right here for sure no matter what, right? So where do we bounce here? Pretty much at the 50% level, right? Came back up and then really made our big move here. So let's look at a few more. Let's show you guys a down move. See if it works on this down move. So here's an example of if it works. Looks like it will. So let's say that you're not into shorting, right? And you don't have anything really to look at here because you can't draw a fib retracement, from there to there on this side because you didn't have an up move, right? You only had a down move. Well, check this out. You just go the reverse, right? So you go from the top of the move, instead of going from the bottom of the move to the top of the move, you go from the top of the move to the bottom of the move down here, right? Before we started bouncing. So let's check this out. All right. So this would be a short scenario, right? So shorts are going to be looking at possibly taking profits down here. These are the profit levels. These are your extensions, right? They're going to be looking to take profits down there. And why are they taking profits down there? The same reason that we're taking profits on the top side on our extensions, because that is where we could possibly see resistance up there. Flip side, when you're on the downside, this is where you can possibly see support on this downside. So you can use fibs on the downside as well, even if you're looking to go long. Because look where this thing bounced. I mean, right there at the golden ratio. Bounced like a champ and had a very nice move back up, right? Great move back up. So you can use them on the flip side as well. So keep that in mind. Okay, let's look at a couple other moves. Let's look at, did we look at this first move here? Just in case we didn't, let's look at it again. So the bottom of this move here to the top of that move there. And yes, we bounced at the 50% level. Okay, and we ended up not taking profits until way up here. But it doesn't mean that you have to wait until any of these levels are hit. That's 100% up to you. If you want to take just this move from here to here, once it bounces off of that 50 and you want to take your profits once it busts above that 23.6, go for it. Totally up to you. Or maybe you want to scale out at each fib level. You took the trade off of the 50. Maybe you want to scale some out here. Maybe you want to scale some more out here. And then it's up to you if you want to keep riding the trade, until you started, bouncing back up. Because, there's never any guarantees. Once it gets down here, it can be just totally finished. Something that just a little rule of mine is Once we get below, since this is the most significant level, when we're on a pullback, we've got our fib retracements drawn and we're on a pullback. So we made this move up here, and then same thing happened here. But instead of bouncing at the 50, let's say that it broke below, and it even broke below the 61. Most of the time there, unless there's something else that's giving me indications that the move could possibly reverse and go back up, most of the time when it breaks below that 61.8 level, I'm usually out at that point. I'm thinking, okay, well, it's over. It's not going to see a bounce. That particular trend is over. For some people, that level is the 50% level. Some people, that level is a 78% level. Once it breaks below the 78, they just assume that it's over. For me, I start getting pretty nervous once it breaks below the 61.8. Because keep in mind, that's the most popular level. So traders are looking for bounces at this 38.2. Now, you know, it can certainly happen at the 23.6. That is a fib level. But bounces can happen as 38.2. Even though 50% is not a true fib level, we use it in trading because 50%, 100%, things like that are numbers that we pay attention to. So it's implemented into trading. And then we could also look for a bounce here as well. So that's really up to you where you want to call it quits, whether, you know, which level breaking below that is. For me, it's pretty much the 61.8. Like I said, unless there's other indications giving me, you know, an indication that the trade is going to continue, it's going to bounce and then continue on up. Which in this case, it certainly did. Okay, let's look at see if we have any more examples here that we can look at. I had quite a few direct messages after our session last week on how to draw these things properly. A couple of people were drawing them in wrong areas. They were drawing them like on these moves like here to here, and they're just typically not going to work, you know, on those areas. You want to look for significant moves. A lot of people don't just look for significant moves. They also say, well, hey, I'm not going to draw a fib level until I see a lower or a higher low and a higher high, right? They want to see, you know, a new swing low and a new swing high. You know, that's what they want to see before they're going to draw anything. So, you know, some people would draw from this level to this level, like I did before, and then some people will draw from actually where the move pretty much started here on its upswing to that level. Okay, totally up to you how you draw it. Both of them, you know, they're you know, unless you're getting on a longer time frame chart, they're going to be kind of in that area anyway. And keeping in mind, these are just areas. You know, they don't necessarily have to bounce exactly on a particular area. Although, like we talked about last week, there are some traders that if it doesn't bounce exactly on that level, like that 50% there did, or like it did right here, they won't take the trade. They don't trust it. You know, like here, it didn't bounce on any particular level, so they just stay away from it. That part's up to you. For me, it's just a general area because your drawing can be off just a hair, you know, if you didn't line it up just perfectly, if you're in a hurry or whatever else. So these are just areas that I'm looking at, just like, you know, VWAP is or your moving averages are an area that you want to focus on. Support is an area that you want to focus on. It doesn't necessarily mean it's going to bounce off of that 1823 level every single time. You know, maybe it bounces here, or maybe it bounces here. We've seen that many times. This is just an area to key in on. Okay, so let me show you another way that people will use these extensions. I don't do this, but I'm going to show you this so that if you want to check it out, you can certainly do that. So let's say on this move here that you hopped in on this move, okay, off of your fib retracement, or let's say you just got in on a whim. You didn't have a fib retracement drawn and you took the trade on this big candle here because you saw it had really nice corresponding volume down here, right? So you hopped in there. So what they'll do is they'll use their fib extensions without even messing with their retracements. So you got in the move, right? And so they say, well, I don't need my fib extensions or retracements because I'm already in the trade. So they come down here to the bottom, they'll go to the top, back to the bottom, and then they have where they can possibly be looking at taking profit. Some people do it that way, right? But again, if you did this drawing the way other people do it, the bottom of this move to the top of the move, right, to where it pulled back to, which was right around that 38.2 level, right? Look at where your profit is up there. Yeah, you ended up hitting it, but man, I tell you, most times, I mean, this thing ran like crazy, right? Most of the time, you're not even ever going to get up there. I'm not near as concerned about what's going on from here to here as I am from here to here. This is the move, right? Again, I know we talked about that before, but I just want to emphasize that. That's the move we're focused on. That was the big significant move, not this pullback. Because this pullback can pull back here, bounce up a little bit, pull back some more. I mean, it can start just doing crazy stuff here before it ever bounces back up. So what are we going to do? We're going to concentrate on every single one of these little moves before the next significant move happens? No. So again, that's why I focus on that particular move only, the initial move, and that's why I draw my extensions based on that. Just want to make sure everybody understands that well. Okay, so we talked about these being reversed. Let's see if we can find another example of a down move. Let's look at this one here. Or is that the one we looked at? Can't remember if that's the one we looked at or not. I think it is. Let's try this one. Let's see what happens after this one here. Okay, and like we talked about last week, once you reach the high of the day, these Fibonacci retracements are not near as accurate. So let's see what happened on this move here. So let's start at the bottom to the top of the move at 1951, and let's see what happened. So once we hit the high of the day, we did come back down here. We did bounce off of the 61.8. So you could have made a trade there because at this point we don't know that that's the high of the day, right? This thing could have certainly continued up on and gone to 25 bucks. So right now all of this didn't happen. So we're looking for the next move up. So this was a pretty significant move here, right? So now we're looking for a bounce. And we see a bounce at 61.8. But because this ended up being the high of the day, it ended up breaking down on us. Yeah, sure. You could have made a trade from the 61.8 level up to this level here if you wanted to. You could have certainly scalped that. It would have been a pretty darn nice scalp, 1860 to 1920 or whatever it was. Nice scalp. But once we reach the high of the day, that's when it's not going to work. So if you end up doing a fib retracement and extension and it doesn't work, that can be one of the reasons that it didn't work, because that is going to be, or that was the high of the day, and it just continues to break down from there. And just like anything else as well, keep in mind that just like with VWAP we see a million times, with playing moving averages or breakouts or whatever, these things don't work 100% of the time. They're just areas to focus in on, right? Okay, let me make sure that I covered everything. I think I did, but I want to just make sure. Yes. Covered everything there. Okay. All right, so just a quick recap is I want to just go over this one more time just as a recap. So retracements, wherever they may be, they are where you're looking for a bounce. Why I keep doing that? There we go. So move comes up here, bounces back down. Well, that's not a perfect move there. I'm drawing this on a trackpad, so it's a little more difficult than with a mouse. And then here's where when it starts pulling back, that's when you draw your fib retracement level real quick, and then now you're looking for an entry opportunity. So retracements are for entry opportunities, and extensions are for where you can look. Sorry about my wife's cats there. You can be looking for opportunities to take profit. Something else that I look at when we make this big move up, from the bottom to the top and we start bouncing, okay, let's say it bounced all the way, you know, it tick-tocked a little bit here, but then it came down here and it bounced off the 50, right? I'm also going to be looking at breaking the 38.2, making sure that we break through that. Make sure that this trend is going to continue. Make sure we break through that 23.6. And we want to pay special attention to this 0 level. And why is that? Well, that's where we met resistance last time, right? This is where our initial pullback happened. So we obviously have some resistance there. So you really want to focus in on this level here. Once your bounce is in action, you want to make sure that you're going to bounce above that level and break that previous resistance where we saw sell off last time. So make sure and keep that in mind. And then once you get up here, you can be looking to start scaling out here. If you're having trouble breaking through, if it's kind of breaking down a little bit and you're worried about that, well, scale out some. That's fine. Or sell the whole thing at the 27 level. So that's what these levels are for. Some people believe, and I believe in it a little bit. Some people believe, and this is why I have them colored the way that I do. Some people believe that if you come up here and you bounce off of this 61.8 level, that's why I have it green. It's the lowest, the deepest retracement level, right? That's colored, the ones that we pay attention to. This is another level as well, but I don't pay as much attention to that as I do these three that are colored. So if you bounce off of this green level here, the deepest retracement level, then they think that the likelihood is that this is going to be probably your max profit level here. I don't necessarily think that that's true. I have seen it happen. I have seen it happen where it didn't. So if you bounce off the yellow, then they're looking to take profit at the yellow, their max profit. If you bounce off of the red, then they're looking to take profit at the red. Totally up to you how you want to look at it. The best thing to do for that is to back test it. Back testing is everything, and it's easy to do. You have all of the history that you could ever want with these charts to back test everything. So okay, here I'm going to stop the recording and address any questions that we have.